Well, hello and good morning. Yes, it's me, Kenny Polcari, and today is Thursday, July 18th, 2024, and it is another spectacular day here in South Florida. The sky is blue, the wind is just enough to keep it cool as it blows in off the ocean. In any event, here are the things you need to know to get your day started. Well, it was some day yesterday. Jojo ignited a fire, and then Donnie just added some fuel to it. Tech gets slammed. But I gotta ask, is anyone really surprised? Bonds really did nothing. Oil rallied on a larger drawdown than expected. And the Fed all but confirms a September, November, and December rate hike in the middle of all that confusion yesterday. And what do we have for dinner? Well, the markets are angry. And so we're gonna have the linguine arrabbiata. Okay, oh boy. Tech stocks across the board got smashed and traders were not happy. Jojo threatens to tighten restrictions on chip sales to guess who? Yep, China. He said that he's considering severe curbs if companies like Tokyo Electron and the Dutch company ASML keep giving China access to advanced semiconductor technology. He also mentioned that he's considering tougher sanction on the Chinese chip maker Huawei. Right? And this is what they call a UFO, right? Which is an unforeseen occurrence. Something that investors in the markets were not expecting. And that sent tremors through the NASDAQ stocks, right? Through all the MAGA stocks that could do nothing but go up. And suddenly, yesterday, they went down and down hard. At the top of the list were names like Nvidia down 6%, Broadcom down 8%, Qualcomm down 8.5%, Meta down 5.7%, Uber down 7.6%, SMCI down 7%, Apple down 2.5%, Amazon down 2.5%, Tesla down 3.4%, ARK down 2%, the semis down 7.2%. And it was ugly and uncomfortable. The move was not a total surprise. Now, remember, we discussed this. We needed one catalyst, something that the market was not expecting to light the fire. And light the fire is what it did, right? And Jojo made sure of that. And then to add fuel to the fire, in an interview with Bloomberg magazine, when Donald Trump was asked about defending Taiwan against the Chinese invasion, he suggested that Taiwan needs to pay for the U.S. defense, saying that the country doesn't give us anything. Now remember, Taiwan is depending on the U.S. and Europe to defend that country against the Chinese invasion. Recall that Xi has made it very clear that the reunification of that island nation with the mainland China is historically inevitable. And while it's not happening at the moment, the world does expect that Xi has every intention of taking it back at some point. And with the world in chaos now, there is this sense that now's a good time as any, right, for China to create a third conflict in the Pacific Rim, forcing the U.S. and Europe to try and manage a third global conflict. Names like Taiwan Semi down 2.5%, ASML down 12%, Lam Research down 10%, Applied Materials down 10.5%, all making the headlines. Remember, Taiwan makes about 70% of the world's most advanced computer chips, and any disruption there will surely create chaos for the tech industry and has the potential to disrupt the world order. If China takes Taiwan, they essentially control the chip industry for the world. So first of all, shame on us for even allowing that to become an issue. But this isn't new news, right? This is something that they've been talking about. And again, while it's not happening, the threat is becoming more real. And so the temperature continues to rise. And just FYI, this is not about climate at all. At the end of the day, it was an interesting performance, though. The Dow gained 243 points as money went into the old Dow names, right, are up 0.6. The S&P lost 79 points. The NASDAQ got crushed down 512 points, or nearly 3%. The Russell lost 24 points, or 1%. The Transpost lost 277 points, or 1.4%, while the equal-weighted S&P gave up 25 points, or 0.4. We saw investors pile into financials, up 0.8. Consumer staples, right, up 1.3%. Again, a boring sector. Energy up 1%. Healthcare up 0.5%. And real estate gained by 9. The value trade, the SPYV, also rose by 0.6%. And if you were playing it from the short side, as discussed in yesterday's note, then you won as well. The PSQ, which is the NASDAQ short ETF, rose by 3%. The SH, which is the S&P short ETF, gained 1.5%. The VIXI added 3.4%. This, as the fear index itself, shot up by nearly 10%. Again, look at yesterday's note. We discussed it. Disruptive tech short ETF, the SARK, went ahead by 4%. The leverage short ETF, the S&P short ETF, gained nearly 5%. Besides tech, XLK was down 4%. We saw communications down 1.25%, consumer discretionary down 1.7%, basic materials down 0.2%, the growth trade down 2.9%. Other sectors that got whacked, home builders down 2.5%, airlines were down 1.4%, aerospace and defense down 1.4%, metals and miners were down 2%, cybersecurity down 2.2%. So now the question is, should you be concerned and should you bail? So the answer here is maybe and no. Concerned because you have to consider what this means. Does it change the investment thesis in the long term or not? Certainly in the short term it does, but in the long term or not. If it does, for you, then making some reallocation and rebalancing to your portfolio could be the answer. Underweighting tech and overweighting value, or even putting more money into cash or cash equivalents, might just be right for you. But if you're not worried about it in the long term, then maybe you sit tight and actually do nothing. You keep your current positions and you add new money to the other sectors that are not tech, essentially rebalancing without actually making any sales in your long-term portfolio. But again, much of that decision is going to depend on who you are and where you are on the risk and age scale. A 30-year-old is going to have a very different outlook and a view than a 60-year-old, right? Because the 30-year-old has a lot more time. They could afford more risk. Not undue risk, controlled risk, while a 60-year-old may want to pare back a little bit on the risk and decide that maybe cash is a little bit more settling. Again, it's a personal decision. There's no right or wrong answer here, but what you don't do is you don't make an emotional decision based on one day's actions or one day's headlines, right? You should always call your advisor to help you navigate this unsettling landscape. Okay, so let's move on. So as tech was getting smashed, members of the Fed were not going to let this event get in the way of confirming lower rates ahead, right? Fed Governor Chrissy Waller immediately taking the stage, telling us that he thinks cuts are very near, essentially confirming a September rate cut, hoping to stop the bleed, right? But he does need to continue to play both sides, so he ends it with, but he needs to see more progress, blah, 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 like they all do. In fact, they've sealed the fate. Bonds did nothing really amidst all of this. The TLT and the TLH rising less than 0.1%. Oil prices did rise, up 3% or $2.35 to end the day at 82.85. The EIA reported that U.S. crude inventories fell by 4.9 million barrels last week. This versus the expected 30,000 barrel decline, right? And much more than the 4.4 million barrel decline reported by the API. So I'm guessing here that demand isn't an issue, right? This morning, oil's trading up another 14 cents at 82.99 and remains very much in the $80 to $85 trading range. U.S. futures this morning were mixed. Dow futures down 45, the S&Ps were up 4, the Nasdaq was up 45, and the Russell was down 8. Chip stocks attempting to rally after yesterday's beating. Look, let's not kid ourselves. The chip stocks and the tech sector were vulnerable to a pullback, right? It was just a matter of time before something happened. So let's just let this play out a bit, right? Don't make emotional decisions based on one day's headlines, like I said, or one day's actions. Revisit the investment theme. Tweak it if necessary. Remain focused because remember, this is a long-term investment. The S&P closed at 55.88, down 79 points, but still kissing near the all-time highs. Right? Could we see further weakness? Of course we could. Can the story continue to make headlines? Of course it can, and it probably will, at least for another day or two, which is why you need to stay awake and talk to your advisor and stick to your plan. Fed futures are pricing in a 100% probability of a September cut, a 70% chance of a November cut, and an 87% chance of a December cut. The market's reaction is going to be about how the Fed tells the story. Are they cutting rates because we're about to go over the edge? Or are they cutting rates because they've killed the inflation monster? The market's reaction is going to be how that story is told, right? One of them is clearly negative and one of them is positive. So you have to sit tight and see how this unfolds, right? As usual, give me a call to discuss this long-term plan, one that creates long-term wealth and generational wealth. I'm always happy to discuss it and help you get going. Okay, so what are we doing for dinner tonight? Well, the markets are mad, right? People are angry, or some people are angry. People from the short side, maybe not so much. But it's the perfect time for something really spicy and hot. And so we're going to have, once again, the linguine arrabbiata. Now, the arrabbiata sauce is a southern Italian, like think Naples, tomato sauce that gets a kick from the crushed red pepper. In fact, arrabbiata in Italian means angry. So you can use this sauce on pasta, you can use it on steak, you can use it on chicken, right? You can use it on a range of things. So let's get ready to eat. For this, you're gonna need the olive oil, the onions, the garlic, the red wine, the sugar, the crushed red pepper. You can use chili peppers if you want it really, really hot. You need lemon juice, oregano, salt, pepper, crushed tomatoes, tomato paste, and of course some chopped parsley, as well as fresh grated Parmesan cheese. You wanna bring a pot of salted water to a rolling boil so it's ready when you need it. In a large pot or a deep saute pan, actually, put it on medium high and heat up the olive oil, throw in the chopped garlic, saute it a bit, but don't burn it, 3 minutes or so. Now, add the sliced onions and saute that until it's soft, 5 to 8 minutes more. Now add a half a cup of red wine, a half a tablespoon of sugar, some fresh squeezed lemon juice, maybe about a tablespoon or so. You need oregano, you need a tablespoon of the tomato paste, and a 28-ounce can of kitchen-ready crushed tomatoes. Not puree, just crushed tomatoes, right? And now add the red pepper or the chili pepper if that's what you prefer. Bring it all to a boil and then reduce it to simmer and let it cook for 15 or 20 minutes. When you're about ready for that, add the linguine or the spaghetti, whatever you're using, to the boiling water. Cook it until it's al dente, 8 minutes or so, and then strain it, always reserving a mug full of the pasta water to keep it moist. Return the pasta to the pot, add back a little bit of the pasta water just to moisten it. Now, add the pasta directly to the saute pan that's got the sauce in it, right? Toss it well. Add a handful or two of the grated Parmesan cheese, and then serve it immediately in warm bowls. Enjoy this with a nice bottle of, actually what really works with this is a beautiful Brunello di Montalcino, because it's like velvet. And always have extra cheese on the table for your guests to enjoy. In any event, it is a spectacular day here in Florida. Let's hope the markets do turn around. Until tomorrow, take good care.